Is Social Security going to be there for me? If I turn 62, shouldn't I take it now? Or I hear that many people should wait and defer until the age of 70. What if I have health issues? These are just some of the questions that I get, and I want to share with you an insider's look at the 7 crucial questions I get with my clients and how we respond to them. But before we get there, I want to make sure that you subscribe to our channel. Hit the notifications bell so you're alerted to when we post new videos. So I want to start off by sharing with you a study that I've shared previously, but I think it's really important for this conversation. So let me take you to my screen for just a moment. So there was a study done in June of 2019 by United Income that said Americans lose trillions claiming Social Security at the wrong time. The study concluded that 96% of retirees choose the wrong year to tap Social Security, and that most people are better off waiting until 70 to claim, though 43% of adults actually are better off claiming before age 70. The big takeaway from the study was that by claiming at the right time, more than half of retirees would see income in their 70s and 80s rise by more than 25%. So given that there are 567 different claiming strategies, it's no mystery that we're, for the most part, making the wrong decisions, right? Again, I say our industry is doing you wrong by not telling you how to make these decisions properly. And it's not just a straight calculator. You have to take into account your age, your financial situation, your income, your spouse's age, your spouse's income, health issues, life actuarial tables. There's a lot to go into it. So let me share with you those 7 crucial questions and an inside look as to how we deal with it with our clients. So the very first question that we deal with is, will Social Security be there for me? Is it going to go bankrupt? Well, about a month ago, I put out a video here on the channel called Biden's Social Security Strategies. And in there, it went into great detail, if you want to go there, to see bullet by bullet what the possibilities are. But let's start from the top. The Social Security trustees have done a study, and an independent study was done as well, that basically says that if we don't change anything, that Social Security, somewhere around the year of 2035 or so, will only be able to pay approximately 79 to 80% of the benefits that they're currently giving out. So number one, they're not going bankrupt. It would just mean a reduction in benefits. But number two, do you honestly believe that your congressional representatives will allow for one of their most important constituents, those who are receiving Social Security, to face this reality? So there are numbers of different adjustments that can be made. I recently talked about it on Jordan Goodman's Voice of America podcast, where whether it was reducing or eliminating the cost of living adjustment, whether it was increasing the full retirement age, whether it was, making more taxes and a higher threshold for Social Security taxes. There are a number of different elements that can be tinkered with to either kick the can down the road further beyond 2035 or solve it for a lot longer period of time. We will address this. It's just a matter of time. So the answer that I give to my clients is it is not going to go bankrupt. I do not believe that. Congress has faced this before back in 1983 and made adjustments at that time. So we cannot make and we do not make decisions based with regards to our planning and our roadmaps for retirement based on Social Security going bankrupt. So the second question we get is, will I ever get back what I paid into it? And this is a great question. And actually, there are some studies out there that show. And what they did was they took a look at somebody who started working 1972 and retired in 2019. And the studies took a look at, taking a look at the average wage base, which is referenced in the Social Security Administration and on their website, and took a look at income from 72 to 2019 that was 50% of the average wage, 100%, 150%, and 200%. Because we all pay in something a little bit differently. Typically, if we're working for somebody, we're paying about 6.2% of our income up to a particular threshold, depending upon when that time was. So the question is, are you paying more in than you're going to be getting back? And based on a 2% inflation rate, which is what basically the Social Security Administration trustees are looking for down the road, there's absolutely no question that very quickly you get back what you paid in, and over time, looking at a normal actuarial table, you get significantly more than what you paid in. So the question is it a good investment? If you look at it in that way, I believe the answer is yes. The third question that I get, and it's interesting because some have read something about this or heard from friends who have already retired and already talked with somebody, that everyone should delay their benefits to the age of 70. Now, let's talk through this for just a moment. You're eligible when you're 62 to take your benefit. At full retirement age, you get your PIA, personal insurance amount, and that is the full benefit at full retirement age, and that age is between 66 and 67, depending upon when you were born. And then if you wait beyond that 66 to 67 age and don't take it until 70, you get a guaranteed 8% increase in those benefits, plus you get the cost of living increase if there is any. On the flip side, before full retirement age, you get a cost reduction by taking it earlier, what we call the penalty phase. If you wait till after 67 or 66, we call it the bonus phase. But not everyone should take it and wait until age 70. As United Income Study put out, 43% of those should be taking it before age 70. And it all is dependent upon, first of all, your health considerations. Secondly, income considerations. Then if you're married, how old your spouse is and what benefit he or she is eligible for. And you have to put all that into the calculations in addition to what your cash flow need is, which just begs the whole question of planning. So it's not an easy, hey, you should wait till 70. For every situation, it's different. For the majority of folks, you really shouldn't take it till full retirement age, but there are some considerations to taking it earlier. And to wait till age 70, again, United Income stated 43% of people who claim strategies should take their benefit before age 70. I know that this is a lot. And in my new book, Don't Outlive Your Money in Retirement, we devote an entire chapter to the 567 different strategies available. But the real question is, are you prepared for this next chapter in life? And what we've done is we've put up a quiz for you. It's very quick, 2-minute quiz. Once you finish it, we'll score it for you. Which of the 3 stages of retirement preparedness are you in? And then we'll also, once you finish it, we'll get you back the score and a free chapter of the book and 2 worksheets to give you some more clarity. So go ahead, fill out that quiz. The next question we get and that we talk with our clients about when it's approached is, but I get more checks when I start at 62 versus when I'm waiting until full retirement age, 66 or somewhere between to 67. And this is why we have 7 different calculators that we work with our clients, because we take a look at what we call the break-even point. If you started at age 64 or 62 versus starting at age 66 or 67, how much longer do you have to wait to break even? And the reality is, and we've done this dozens of times on our calculator for the break even, it's somewhere in the vicinity, depending upon your circumstance, 12 to 13 years of break even. In other words, if you wait until age 66 instead of taking it at 62, 66 plus about 12 or 13 years means that you'd break even somewhere about the age of 78 or 79. So if you believe that you have good longevity, then you're much better off later on. Again, the United Income Study said you could increase your income in your 70s and 80s. And this is one of the reasons why almost 40%, I believe it's close to 35% of the people who are eligible at age 62 take it at age 62, which for many of them is a mistake and could be leaving a couple $100,000 on the table for a household over the lifetime income for that household. So be very careful. Don't get deceived that just because you're going to get more checks, that you're going to get more money. The next consideration is health. And if you've got some sort of health circumstance that may mean that your actuarial life expectancy will be shorter than the averages, then you need to take a look at a couple of different strategies. One particularly, if you are married, big question, and if your spouse's PIA, or the amount he or she will get at full retirement age, is less than yours at full retirement age, then you are actually better off waiting as long as possible to claim your Social Security benefit. And the reason is based on the rules for the survivorship for your spouse who's going to survive you. He or she's benefit will be pegged to when you started to take your benefit. So if you take it at 62, 63, 64, you're going to get a haircut versus waiting till your full retirement age or later. And that would provide your surviving spouse with more money when he or she may need it later in life. The sixth question really is, and the way I put it, is more political than anything else, where some just don't trust the government, right? And I sort of addressed this question before. Now, when it comes to the funds, okay, starting this year, the trust has already indicated that there's going to be a little bit more outflow than inflow of money into the Social Security Trust, because now, based on the amount of people working versus the amount of people retired, that is going towards more of an imbalance to those who are now retired. So the actual management of the monies that are there are key. And that's where I talked about previously, taking a look from a congressional perspective at some of the changes. But when we think that we just don't trust the government as a general rule and that they're going to allow for this to go by the wayside, as millions of Americans are relying on this, and as I mentioned before, it is political suicide for Congress to allow for this to go down the tubes. That, to me, divorcing the way you think about politics or government, you must divorce that from the way that Social Security is administered. To me, there is no other way to think about this. The final question is, circumstances are such that I may need the income right now. I'm not full retirement age, but I need it right now. So there's a number of different ways that we talk to our clients about this. Did they lose a job as a result of the pandemic? And what are the prospects of getting that job back? What are the needs in the household? And how can we fill those from a cash flow perspective in some way other than maybe having to take the haircut for Social Security? For some, it may be much better off. Maybe bills cannot get paid right now and they're in a dire strait. And Social Security is that insurance that even though it is less than what it would be 5 years later, it's more than what they've got now, and it may save them from a disastrous financial outcome. But most of the people I talk to, and certainly my clients, are not in that situation. And what we do is we take a look at, is there money in the personal account, in the IRA? Are there ways to make adjustments? Because here's the reality. Think about this for a moment. If we are a little short on income now and we agree to take the haircut now, do you know that the difference between taking the Social Security benefit at 62 versus waiting to 70 with a typical cost of living increase is a 75% difference? That's a lot of money. So if it's at all possible, wait a little bit longer, make some adjustments to what you're doing now. Because if you really need that income now, but you have some assets, you're also going to need it later on in life, and it could become more of an issue later on. But Social Security can pay you, again, getting back to the United Income Study, much more money in your 70s or 80s, a 25% increase, if you make the right decisions at the right time with regards to Social Security. Now, clearly, that's an insider's look into some of the conversations that we have with our clients. And for everybody, the answer is a little bit different. So navigate through the channel, see some of the Social Security videos that we have here, and hopefully that will help you to make a more guided, intelligent decision for you. Here's to enjoying the retirement journey.